Hey, my name's James Nicholson, and in this video, I've got a lender, in fact, one lender that's been very, very competitive over the last few weeks and months in our weekly roundups that we do where we look at the best rates. This lender has often been one of the cheapest lenders, and they're bucking the trend here because while everybody else is putting rates up, they've actually cut their rates, and I'm going to say slashed, which I know people don't like when I say that, but they are down in a big way. And this is really, really positive. It means they're really aggressively trying to get market share in the market. And we're going to talk about who's cut the rate, why they've cut the rate, and much, much more. So before we jump into this, as always, if you haven't done already, do subscribe to the channel over there and hit the bell notification. Am I here? Look, this is good news. So let's smash like, tick or like, do something to that like button. That really helps with the YouTube algorithm. Let's get more people aware of this rate cut. So before we talk about who's cut rates, I also want to talk about something which I'm going to be talking about fairly soon, but I need more data on it. And that's the fact that Lloyd's, TSB and Halifax are increasing their rates. We don't know how much yet, but that's something you're going to see early next week. So this really does buck the trend. We've had a number of lenders increasing rates. Firstly, why? A lot of it is because the rate that they borrow at, the SONIA swap rate, is increasing. So you borrow from HSBC or NatWest or one of these lenders, they borrow from JP Morgan or someone big like that. And the rate that they get is called the SONIA swap rate. Now, that's increased over the last 2 weeks. And in fact, it's gone up a fair bit. And the reason for that is there's two major uncertain things at the moment. One is the US election. I mean, if you look at the news, they say it's on a knife edge and basically anybody could win, toss a coin. I don't think it's that close. I don't think Trump is actually going to win. Whether you like him or not, it's irrelevant. I don't think he is actually going to win this time. And I think it will be actually a landslide. I think the news want to keep you interested in that, but still it means that there's some uncertainty over there. So as we had with our election, as we led into our general election, a lot of people paused house buying, for example. So that gives a little uncertainty in the market. So that will make a big difference when someone is elected president. Next is the budget next week, and the budget sounds brutal. Keir Starmer did an interview on Sky News, and I think it's Kay Burley is the reporter. And one thing that stood out in that is that he said that he will protect working people. The interviewer asked him, does that include people like landlords, for example, who's not a working person? And he made it quite clear that he doesn't see somebody that is a landlord or doesn't earn income on an hourly rate, meaning business owners, entrepreneurs, landlords, people that own stocks and shares. He doesn't see them as someone that maybe needs so much protecting. So there was some pushback on that. And yeah, he did not clarify that landlords will not be hit with something. So there could be something in the budget that we're not expecting. I don't know. Hopefully we'll get some more leaks. That's what we want to see. But there's uncertainty around the budget. Is capital gains going to go up? They've said probably not for property, but it is going to go up for stocks and shares. Is there going to be stuff in there that causes the economy to slow down? Is the government going to borrow a load more money? And if they do, does that push your mortgage rate back up? These things are causing problems in the market, and that means the SONIA swap rate has gone up because it's uncertain, and mortgage companies have been passing those on to you. So you're going to see some more increases. We already know Halifax and TSB next week will be raising their mortgage rates. So who's cut and why? NatWest have cut. And this is good. Very good. Because when we do the weekly roundups, and if you want to see what the best rates are, I did one on Wednesday. So go back and check Wednesday's video on what the best rates are. NatWest is often one of the best, cheapest lenders. So look, it's kind of irrelevant when you get a lender that is not in the top 10 cheapest that cuts rates. It doesn't really make that much difference to the market, because if you can, you're going to go with the cheapest lender anyway. But when one of the cheapest lenders cuts rates while others are increasing, this will get them more market share. NatWest have said that this is based off the back that Andrew Bailey is talking about inflation this week. He's talked about inflation is going to drop faster than expected. That's definitely true, because I listened to the minutes of the Bank of England meetings and they were expecting 2.7% inflation this month and we're at 1.7. So quite wrong on their forecasting there, but they're now expecting that inflation is going to drop. Hopefully they're not wrong this time and it doesn't go launching up. Hopefully but their forecasting hasn't been great and they feel inflation is going to drop significantly faster. They've also said in the last 2 weeks they'll be able to cut rates more aggressively. That's going to make a big difference. Those two statements are something that NatWest has taken hold of. They see base rates dropping, they see inflation dropping, and that's why they've decided to be more aggressive with their cuts. Now, they don't tell you what the products are, but I'm going to share what they have said. They said they're going to drop their products from between 0.2% to 0.41%. These are big drops. These are active today. So you'll need to go out there, and if you want to look at NatWest, have a look at what they've got. It'll be on their website, but often you call them up and they'll say that rate's not available to you. This happens a lot with NatWest. So my recommendation is you have a look on the site, see what the rates are, but then go through a broker. They like people to go through brokers. Some lenders are like that. They don't like the Joe Publics calling them up and doing applications direct. They say you can, but it's easier to go through a broker to get the best rates in the market. They're active deals today, but they could also be on the broker's site, and maybe they're not active if you go direct with NatWest. But this is definitely good, and this is what we want to see, is more of this from people just trying to get market share. It is a busier market. It's not as busy as it has been in years gone by. And so lenders are looking at this and saying, I want to get more business. I want to get more activity. And they're just being a little bit more risky by dropping rates in order to get a lion's share of the business. And that's what NatWest have been doing the last 3, 4, 5, 6 months. They've often been fighting with Barclays in particular to be one of the cheapest lenders. So NatWest, they're down. That's a good opportunity for some of you to go and speak to NatWest, maybe fix a good deal. And if you've got a mortgage that expires in the next few months, fix a rate now. And then if the budget goes horrendous next week and interest rates go up, at least you've got the best rate that you could have got on the market. If the budget goes wonderful and everything's not as bad as the media is portraying and interest rates go down, you can swap on to that lower rate. Anyway, this is good. It's a great start from NatWest. I'd like to see other lenders doing the same. Let me know what you think in the comments below. Do smash like, do subscribe, do check out all the other content on my channel, including this video right here.